and let's go ahead and get into it. So I mentioned it a little bit earlier, but we are on the web platform. That's my.tastytrade.com. If we want to get into the tool, we'll go to the top of the platform under trading. And then on your left side panel here, you should see back testing or this kind of little backwards arrow. Now, if you don't see this left-hand side, it might be collapsed. But even if you scroll over your mouse over these different points or expand that left side panel, you'll go ahead and see the back testing tool here. Nice. So once you get into here, you'll see a quick disclaimer that pops up right now. I already went through it, but it's essentially past performance is not indicative of future results. So please keep that in mind that this is a tool looking at past information, and it's a tool that we'll use for researching and checking out how these strategies or how our strategy might have performed in those different past timeframes, not necessarily how it would perform in the future. Again,
That's right.
just quick disclaimer there.
A back test is really just you're testing a strategy on historical data to see how well it performed or had performed over time in the past, and then it's in effect it's 4 words: testing return on capital. Different test, different variations of a strategy, and allows you to be able to look at it and see how well it performed historically.
Exactly. Great. So when we get into the tool here, and I saw someone mention it, is this available for business accounts? This is available for all tastytrade users. And what's great, and you look at some other offerings on backtesting tools, this is completely free. So there's no extra charges, there's no subscription, there's no data usage or whatever that you're getting charged. You don't even need to have, you could have an unfunded account technically. You could have just an empty account. You can still use this tool. That's how great it is. So a lot of people ask like, hey, do you have paper trading? Do you have, simulated trading?
Mm-hmm.
And I was listening to you talk earlier, but this is kind of like, this is paper trading 2.0. This is modern day paper trading. Instead of spending a year on simulated trading, testing your strategy, now you could just do it at a click and you'll see right away.
It's very quick. Paper trading, nothing's wrong with paper trading. It's just you have to wait a long time to get the results in, right? You have to place an order, see how well it works, and then wait till the next day, wait to the next day, wait to the next day to find out how that result, that strategy had worked over time. With this, it's literally you can pick a strategy and you can pick your start time and your end time, and you can get the instantaneous results back within just 10 seconds.
Yeah. And let's show it. Let's see. Let's hop in.
Yep.
So when you get into the backtesting tool off the bat, there's a couple things we'll need to set up before we go ahead and do our backtest. So at the top here, we have a list of symbols. I hope I see a lot of questions coming in. We'll try and catch them, but we'll check out the list of symbols here. These are going to be a list of symbols of some of the most highly liquid, heavily traded products. We're looking to add more symbols soon.
We have 50 right now, looking to get to 200 in just a matter of a couple weeks.
Yeah, exactly. So a lot of different symbols to check out, mostly some of the big names, but in this case, let's just do it with SPY. So SPY, SP 500. We can also then, to the right of that there, we'll go to our interval, and this is going to be the time frame for the data that we want to backtest. So maybe I want to see how this certain strategy or what strategy we're going to look at here performed over the past 3 years. Or I can click on this drop down. I can go, maybe I just want to do the past year or past 5 years. And then what's great is that we also have all these different market conditions, like the vol spike very recently in 2024. Also, we have the post-pandemic surge, pandemic. I'm sure we're going to be adding in more of these too here soon. But then also you can look at all available data, which goes back to 2013.
A lot of different scenarios.
Yeah, a lot of different scenarios. And if you want to make your own scenario, you can just go to custom here and pick the exact dates you want.
That's right.
Yeah. So let me get my drawing tools off of there just for simplicity's sake. And I think this is something we talked about too, is that, you're looking back a really long time frame. It might not be as applicable. It depends on what you really want to look at. But I think a good example to start is maybe looking at just the past 3 years. Pretty relevant.
I think that's very relevant. I mean, you're looking at current market conditions relatively. So if you go any further back, then, let's say you can go all the way back to 11 years. But the longer you go back, it's people change strategies and whatnot. So
Exactly. Yeah. It's
I like to keep just a few years.
yeah. It's like, oh, am I going to be placing the same exact trade for 11 years straight? It's like, I'm probably going to learn a lot, figure out something else, might have a different strategy. It's like over 3 years, I could see that a little more
A
realistic.
lot of
Yeah,
different
yeah.
market conditions happen during that long of a time span.
Yeah, exactly. Exactly. So great. Let's do 3 years and then we can select our strategy here. So if you don't see your exact strategy, maybe you're doing like ratio spreads or some kind of weird custom combinations here, you can always add legs later, but just for example purposes, let's just keep it simple. We'll look at selling a put, which is a bullish strategy. So we can go long call, long put. We could do our different iron condor or strangle, but in this case, we'll just go ahead and check out a short put here. So we'll go ahead and click on that. And now we're going to get into our entry area. At the top, this is going to be our first leg. So we have the direction of buying and selling. In this case, we're selling, and we have a call or a put, and we were selling that put. Next to that, we also have the quantity, the strike that's being selected, and this is actually going to be based off of deltas. And we'll kind of show you why in just a second. And then also the expiration date for this option.
And you can modify all these.
Yes. So at any time, you can click on any of these boxes. So if you want to do 2 contracts, you could type in 2. If you maybe wanted to, go right at the money, you can do 50 deltas, or we can go 30, or maybe like, go
16 or
16 and
like
1
that.
standard deviation,
a lot of
something
different
like that.
adjustments that you can make depending on how bullish or how bullish you are in the strategy.
And you might ask, like, hey, is there a way to do it with just a specific strike price? I don't want to do it based off of deltas. And the main thing, or the reason why I can't really do that, is that not every expiration has the same strike price. There's some expirations on the same exact symbol that are $5 ticks, that are $1, that are half cent, or half dollars or 50 cents.
And stocks move.
In stocks move. Yeah, exactly. So it's not necessarily. It's just a lot more. Trying to think of a good word here, but it just gives a better picture of, especially when we're looking at back 10 years, delta is going to be a lot more closer than looking at the exact strike price.
That's right.
Yeah. And then lastly, we have days until expiration, or DTE. So this would be 45 days until expiration. Now, at any point, if you wanted to, you can go back to the screen we were just at by going to select a different strategy. Or if we wanted to, we can also add another leg. So we'll show this in just a second. We'll come back to this. But then we also, below this, have our entry and exit conditions. So as you're establishing your strategy, as you're, kind of getting your functions for your trades here, this is where you'll want to kind of fiddle with your different back tests in terms of maybe adding on some additional legs or changing your entry and exit conditions. So first, we'll start with our entry conditions, and that's going to be the days at which our trades are placed. So first, you have every day, and there's a little description there below it too, and this is going to be entering a new trade every day at the closest expiration.
Now, that's also kind of unrealistic, right?
Yeah.
If you're doing it every day, because that means that you can end up with a lot of trades.
Yeah.
So it's nice to be able to take a look at this, but it's not very realistic.
Exactly.
To do it a little bit more realistic, we could just say, okay, I want to only do this. Let's say, I want to limit the number of active trades. So we can just click and we can put this as 1. So we want to limit this to 1 trade. And we can also say, we're choosing the closest to 45 days, but only in this particular strategy. So if it was a 43 days and you had a 55-day expiration, it would choose the 43-day because it's closest to it. Now, if you put on there, I want to do it only on the exact DTE, the exact days till expiration, you can choose that and say, I only want to choose it where it's exactly at 45 days, and you can click that.
So we'll go ahead and click on that there. And then lastly, there is also on a specific day of the week, and maybe you're going, oh, I only want to enter a new trade, maybe
your work situation or whatnot.
Yeah, exactly. But in this case, we'll just stick on the exact DTE. And then we'll also limit do we want to limit the number of trades?
No, let's not limit it right now.
We'll come back to that in just a second to show you kind of what that does. But just to keep it simple, we'll just do on exact DTE match. And then we'll also come back to these exit conditions a little bit later. Let's just run a test and see what it looks like.
Okay.
Go ahead and we will run the back test here. And right now, loaded pretty quick for me, but for you, it might just be a little loading bar. It takes like 5 seconds sometimes, depending on how far back in that data. You know, if you're going back 10 years, it's going to take a little longer.
That's right.
But 3 years, pretty darn fast. And now in this screen, we're going to get our breakdown on the trade that we just set up. So we have our trade here on SPY, the dates, the legs, all that jazz. And then below, this is what we want to really check out in our back test here, and also in some of our other pages in just a second. But in this middle area here, we're going to see a graph of our strategy's performance, this orange line, versus just the outright buy and hold. If we were to just buy shares of SPY, that would be this gray line underneath, or this is just kind of, you know, the price of SPY over time. Mm. And you can kind of see that different correlation between your strategy's performance and SPY. In this case, selling a put is a bullish strategy. So it's moving directionally. It's going somewhat together for the most part, yeah. Right? And then what's nice too is you can scroll through, you can see the exact date, you can see the exact profit or loss, for the, your net profit or loss, and then also, what was the price of SPY on December 23rd, 2023? It was 473.65. So you can check that out as you're going through on the mouse. And then below that are going to be our metrics on our performance. So we'll have our total profit or loss. This is going to be for our strategy here of selling the put. And then below that, drawing tools cooking here, we'll also see buy and hold. So buy and hold is showing us the profit or loss if, again, we were just buy and hold SPY with the same capital that we were using for trading these options. Right?
That's right.
So in this case, if we were over this 3-year period to implement this strategy based on those conditions, we'd end up with a profit of about 21K. That's right. Fantastic if I knew this 3 years ago, right? But then also you'll see here is that it's actually showing that it's underperformed buy and hold. In this case, it's almost essentially maybe a little bit better to just buy and hold the stock. Now, not necessarily based on some other metrics that we'll look at. You might see right away and be like, oh, I should just buy SPY, and why even sell options? It's underperforming. Well, there's these other metrics that are going to come into play.
Absolutely.
Average profit or loss per trade, somewhat useful, but I think the main things that we're going to be looking at here is going to be your max drawdown when we're looking at the potential risk for your strategy, and then also your return on used capital. So for this strategy right now, and again, it looks like the buy and hold is a better, return on capital, but you're not always using that 64,000 for those trades.
Exactly. Yeah. If you look at the comparison between these two strategies, it's basically like one strategy, one selling a put is maybe about $8,000 worth of capital, right? So at this, because we didn't put a limit to the number of transactions that we did in this strategy, we had up to 8, it looks like, at any individual time in this particular strategy. But also we had a lot more variations. You can just kind of look at the visual, and you can see that the largest drawdown was actually larger when you had that buy and hold approach. When you're selling a put, it's a bullish strategy, but really nothing's as bullish as just outright buying stock. So, in a bull market, it's going to be very hard to, just make that comparison, and just it's not really an apples to apples comparison. But we can even go down to details here.
Yeah,
we can see, and we can really look into this a lot deeper.
I saw the question come up of, can you set your starting capital? You can't set a specific starting capital, but that's where it'll come in on the number of trades that you're placing.
Exactly.
In this case, for this back test, we didn't limit the number of trades that could be placed based on our parameters. So that's why you see $64,000 being used in capital. Now, I'm sure a lot of people, it's a lot of cash, it's especially for one position or one symbol, at least SPY a little more diversified. But when we look at limiting the number of trades in the entry conditions, that's where you'll see those capital requirements go down. Or maybe if we look to hedge our positions too.
That's right.
But let's go ahead and get into the details page here. So in our details page, we'll get a breakdown on each one of our trades in the profit or loss. So you'll kind of see here, and it makes sense with naked put there that, on those days where we got a bit of a drawdown, it was a lot more aggressive than the premium we're receiving on the upside. So we'll get a breakdown where we can scroll over and see, okay, yeah, on 1/4/2022 would have had a loss of, or profit or loss about negative 2,620, or on this specific day, 8/16. And I think that's where our max drawdown is coming from as well, of, where was that peak and that trough, and what was that greatest distance traveled? And that would be that 22.16% on the drawdown down here. There's a lot of other metrics that we can check out. We can see how many trades were placed. So we had 93 trades placed over that 3-year period. We can also see largest individual profit, largest individual loss.
And that actually means quite a bit too.
Yeah.
When you're looking at the profit rate and you're seeing that with this particular strategy, you had about 83% success rate. That's very positive when it comes to trading a particular strategy. It's just making sure that you had that continuation of success, month after month of success. And that's very important to keep a strategy alive,
Exactly. Yes. Thank you. And then also we'll check out there's some metrics on your premium capture of, how much premium we're keeping after each of these trades, average profit or loss, the buying power effect of each of these trades. So, and even then, if you were to go into the trade tab, and we can do it in a second, check it out, you'll see, if I were to set up a short put on spot right now, that's probably the average buying power requirement is right around there.
8,000.
Yeah, maybe a little bit less. But then on the right here, we'll also see total profit and losses, capital used, and oops, highlighted that there. But
you can even see the total fees, which is really convenient.
Paid. Yeah.
And we're very transparent about adding the fees in there.
And you might be thinking 93 trades, that's a lot of fees for 93 trades. And that's because when we get into the logs here, which is really nice, you'll actually see that we are considering all exercise and assignments. So I think I saw a question come in there earlier about, oh, so is this just considering everything is cash settled? No, this is considering the trades as if, they were in that real environment where, okay, that expired in the money, got exercised or assigned.
That's right.
And then we would have to close out that position. And with exercise and assignments comes some of those extra fees. So that's why you'll kind of see, maybe if you're not setting up a certain days until expiration closing exit condition, you might have extra fees to pay. But what's the trade-off there? That's kind of the comparison we can do in a second.
One of the nicest features about what I'm seeing right here within the logs is the ability to download the CSV. So you can mess around with it within a spreadsheet. We're allowing you to just download that data and just mess around with it however you want, because a lot of people have very different strategies. That strategies are very difficult to be able to examine without using a lot of spreadsheet usage. Each one of these tabs, we have a trades tab, an orders tab, a transactions, and a daily settlements tab. Each one of these have different downloads that are available.
Yeah.
So you really have 4 different spreadsheets that you can download. I mean, we're giving you everything here.
Yeah, you can really dive in. You can get deep with it really quickly. And also, you can kind of fine tune and say, well, maybe that isn't a trade that I would have placed based on my strategy. You can just go into your Excel sheet, remove it out. So if at any point you want to download any of this data, especially as you're running a bunch of different back tests and maybe comparing these results, that's where it could come in super useful.
Great way to do it.
Yeah. And so that was just the trades section here where we can see each of our trades, if it expired, if it was exercised. You can scroll down, click on more hidden because I've got quite a few here. And then we'll also check out the orders section here where we're actually seeing, some of those exercise or assignments where we're having to close out of shares that we got exercised or assigned. In this case, we would be assigned long shares, so we'd have to close them out.
And this tells you exactly the strikes that were chosen too on each transaction, right? Each order, it's showing you on the first date that we have here, which is October 12th, 2021. It says that we had a credit of $6.13, which is $613. We sold one 419 put, and that's the credit we received. And it was also done at 2:45. And that's something significant about this is we took the most liquid part of the trading day, which is at 2:45. It's not on the close. It's right at, just a few minutes before the close. That's when you have these very tight bid and offers. We're not using the last trade. We're using the bid and offer. So this is a realistic back test that we're doing here.
Perfect timing because someone just asked that in the chat. So they're asking, is this real time? Is this the day or the end of the day? So yeah,
This
2:45
is
at the end of the
intraday,
day.
2:45.
Yeah. You'll see those times here.
Central time. Yeah.
Yeah, exactly. Or when it comes to the exercise assignments,
That's right.
it's 3 o'clock.
You can
But
also see the trades that are being put on. So the trade number 1, 2, 3, and then you can see which trades were assigned, which trade numbers, and you can keep track of which ones are occurring over time. So you can see that on 2/18, on the 7th here, you have a credit because you got some assignment issue right there. It's keeping track of these transactions.
Everything. And then even here, again, just more information on the
Tells you the
trade.
fees. Very transparent about that.
Yeah, exactly. And then lastly as well, daily settlement. This is kind of, again, that like bigger picture of looking at your total profit or loss
every single day.
Yeah.
The settlement at the end of each day.
And it's considering your net liquidity is essentially like the requirements off the bat. It's saying that, hey, oh yeah, I already have this cash in my account.
That's right.
When I start this up, right?
That's right.
So,
and again, you can download,
download
each one of these things are different download.
Yeah. So it's super, super nice. You can always go back, check it out, really get into it and start fine tuning things, especially as we go in and check out some different back tests. So once you've done one back test, maybe you've downloaded it, maybe you want to just go back to the page we were just at, you'll see here in the top right, super, super easy. You just go click on new back test and boom, we're back to the page we were just at, where we can go ahead and start playing around with some of our conditions. So just looking at the time here, I think
this allows us to be able to refine, based off of what we just saw, we can make some refinement to our trade to see how we can perfect this, make it look a little bit better. So how about we just limit, first we can just like limit the number of trades.
Yeah, let's do that. We'll limit the number of trades. So in this case, or before, we were just saying like, hey, every single time that we get on an exact DT match, go ahead and open up that trade. But in this case, we can now, in the bottom left here, limit it to say, hey, I just want to have one position open.
Yeah.
Selling a put on SPY at a time. Once one is closed out, go ahead and open up a new one once I have an exact DT match again.
That's right. That's
exactly.
right. Because, capital is limited. You don't have unlimited capital. So this is a nice feature here.
Exactly. So we could limit the number of active trades, and then even then, just for example, let's go ahead and just run it. Let's just see with difference there. We'll kind of see here that I think
okay. So this was a little bit. We did a little bit of underperformance here, so let's make a little bit few more adjustments here.
Yeah. So we can go back here again, and maybe we'll set it up and say,
let's do something every day, or basically let's not be specific. So let's just say, let's limit the number of trades. Let's choose it every day, but limit to just one trade.
Yeah.
So it's basically starting out, it's looking for the one. So it's not saying let's only wait for 45 days till expiration, because that's sometimes seldom. We just want to look to see, we want to have one trade on, but we're choosing the one that's closest, and then we can even make some modifications here. We can take profits, maybe a little bit early.
Set up a take profit too. We could say, hey, I want to, close it out when my position reaches, say, a 50% max profit, or a stop loss of, say, maybe 80% or something like that. We could set that up. And then even then, we'll show this again in just a second, but we could run that back test too. And we'll see here. Let's calculate it real quickly. And it looks like it actually did perform quite a bit better.
Yeah, this one did pretty well. We had a $4,500 profit on this one, historically profit. The average profit per trade does look like it was a little bit less, but we had less number of transactions, I believe, than what we had seen previously. And the return on the capital is considerably higher than just a buy and hold approach on this one.
Exactly. And then,
but then also, look, we have a max drawdown. It actually looks like a little bit higher. So there's advantages and disadvantages to all trades.
Something goes up, something else, maybe that return on capital is a little less, it depends. And that's where it's kind of fun to just, again, play around with it, see what's working.
And it really allows you to be able to see how options trade see how options trade, see how small modifications to either deltas or your days till expiration can have these really large implications to your overall P&L. And by looking at each individual transaction within that logs tab, it really gives you a lot of knowledge there. This is why we call it paper trading 2.0. I mean, this is paper trading for 2024.
Yeah, exactly. It's fantastic. And we mentioned earlier talking about the total fees too, but maybe in something that a lot of people consider as exercise and assignment risk at expiration, right? Maybe it's like, maybe I don't want to take on that risk of taking on the shares or taking exercise and assignment. How could I get around with that with my back test if that's part of my strategy? What you can do too is say exit at a specific DTE, and I could go 1 DTE the day before expiration. All my other parameters, if these get triggered before that 1 DTE, it'll still close it out. But this,
whatever comes first.
Yeah, it'll back test now seeing based on closing that out 1 day before. Laptop Zoom is throttling this computer right now. It was humming before, so it's got a little slower for me. But it seems like it
looks like it was pretty good.
Yeah, doing about the same.
Let's look at the details though.
And then looking at the details, we hop in here.
This is interesting. This, I think, is really one of the advantages with options. Like anything, you always have to consider everything. But look at this. Our average number of days in this trade here were 11 days. And you can see that on the second column, second row down, the average trades were 11. So even though you had a 45-day expiration on this trade, because we have this management technique, we're in this trade for much less than normal. So everything said and done, the number of days and the availability of your capital that you have, it looks like it's a pretty good strategy.
Yeah, especially when comparing to just again buying and holding spot. Is this better? And then you'll kind of see here in the orders or the transaction, you'll see, okay, yeah, we don't see any more of those exercise and assignments. We don't, again, it's not part of our strategy that we hold until expiration, but maybe it is, and we could go back, uncheck it.
Yep.
And again, the button and run back test again, and boom. It's super, super fat. Oops.
And again, these are historical results. So actual performance going forward may be different, but these are historical results.
Exactly. And I think let's just something I wanted to check out too, which I really loved that was added recently, was these different market conditions. So a lot of people asking like, hey, what would happen if I was doing this during this kind of black swan event or something kind of crazy?
You want to stress test.
Yeah, exactly.
You want to see how well. You don't want to look necessarily, like personally myself, I don't want to just look when everything aligns and looks absolutely perfect for my strategy. I want to also, I want to look at that too, but I also want to look to see worst case scenario. If I'm bullish, I don't want to test necessarily a bullish strategy. I don't want to test it during a bullish scenario. I want to maybe test it during the worst case scenario, so I can kind of feel comfortable with the possibility of loss and how that may
look. You can start to see that max drawdown. You can start to see, oh, well, maybe. And then you see during those events, you're like trading maybe undefined risk. And you see, oh, well, maybe if I define that risk, maybe I'm just trading a short put. Maybe if I buy a put as well, kind of hedge some of those deltas. How does that protect against the max drawdown? How does that better use my capital in those tough situations where maybe it's markets playing against you?
That's right.
But
this provides you with an education.
Yeah, exactly. A good education, good research, and just kind of a little extra clarity on being like, oh, okay. That's what
absolutely
happened. Okay, and it could maybe help you sleep at night a little bit when you're like, I don't know what's going to happen if the market crashes and I'm doing this. Well, you can get a kind of a good idea of what might happen. Right?
That's right. So if you're like testing something like, let's say Tesla or Nvidia, and you're bullish those stocks, maybe you want to look at those environments where the stock's gone down. So you look to see, okay, is this something that I can afford? Is this something that I'm okay with? If worst case scenario happens, this, and so you can test those scenarios.
Yeah, exactly. So one I wanted to check out that I thought was kind of fun was the post-pandemic surge. So, when the market kind of rebounded back a little bit through 2020 and 2021. Let's just see what it would look like in this case if we were to sell a put bullish strategy again. And, ideally, kind of makes sense that we profit since the price is going up.
Let's
But
get rid of all those stop losses
we'll
and
take
take
these
premiums
off.
down.
We'll keep the trades to just one. We'll try and keep it a little bit smaller, and we'll keep those entry conditions to every day.
Yep.
Can
But
run
limiting one trade.
limiting to one trade. So we can set that up there and we'll see. Oh, okay, nice. It over this period, we were kind of cherry picking here to the sense that we were analyzing a bullish strategy during a bullish time period in history, right?
Yeah.
But we can see how if you had sold puts based on these parameters during that time frame, that would have ended up pretty nice compared to buy and hold. You can see your return on capital, kind of that capital efficiency that we get with options or with selling puts comes in very, very big. And then even that max drawdown or the max risk here was a little bit less. And that was just from, selling maybe a cash secured put, naked put. But what if we were to say, just add a long put to it, make it a short spread? We can go, we can add another leg here. So this is what I was talking about, where you can kind of customize and add additional legs as you see fit. But in this case, we could just buy a put, or even then we could go back to select a different strategy. Sorry if I clicked a little bit fast there, but we can go short put bullish. Show one more time when select a different strategy. And then short put bullish. And then we can go ahead. Oops. Oh, wait. I was blanking out there. It's a long day. We were talking a lot. We were looking for the credit put spread. Yeah. Okay. There we go. My brain is all over the place. Thank you. I need a little reality check there. But okay. So now we can, either by doing that manually or going back to select a different strategy, you can add your long put there, run the back test and see, hey, if we were to kind of, hedge our position a little bit, how does that affect our overall profit or loss? In this case, a little bit less of a profit or loss,
but you're taking a lot less money.
You're using a lot less money, right?
Well, so this is interesting, and this is something that I really like looking at these type of scenarios. One is the first one that we looked at was just selling a put. It's a 30 delta put, which is a bullish strategy. The second one we just did here is a short put spread. So it's a bullish strategy also, where we're selling that 30 delta and then we're buying a 15 delta put. So we're defining our risk, meaning we're using less capital. The return on investment is much higher. I mean, it's 160 compared to, it's almost twice as much as what we were before. But that comes with a cost. And that cost it does cost us money in order to buy that protection, right?
Yeah.
So on a downswing, we're gonna, if we're to blow down and the market were to sell off, we're protected, so we can we're limiting our loss there. But also that does come up with a cost, and so our total P&L is less here on that strategy.
But yeah, the capital efficiency there,
it's great.
Yeah, a lot better. Makes sense, right? And buying power requirements for a spread is going to be a lot less than a short naked put or cash secured put as well. And then, what's nice, and we can go into the details. We can check out all this jazz. It's really, really, really nice. We could download this.
And this is unrealistic at the moment because, like, literally we had every single transaction.
This is kind of a hilarious example.
Market,
yeah.
Right.
Again, we were cherry picking. It's like, we picked a bullish strategy during a super bullish time frame.
We literally picked the most bullish environment, the post-pandemic surge.
Exactly. But
we're just
so we looked at that at this, pandemic surge. Let's just go back and see, okay, maybe let's just see over this past year or past 2 years. Change the time frame, keep everything else the same.
Different market environments during that time.
And
okay, well, actually it did pretty well too.
Yeah, not
$2,000, 100% return on capital. Let's just do it and check the same thing, but just selling a put. Okay, so we made twice as much. This is also was a very bullish environment, but we made half the return that we did when we're just doing the short put spread.
Yeah.
When we're selling the short put.
Ended up using 11K in capital, and
a lot more
if you're just buying shares at that point, it's going to outperform. So that's where hedging your positions or hedging your deltas a little bit, get that more capital efficiency. Yeah, you might not see larger profit and losses, but maybe you sell two put spreads, or you can based on what you are comfortable with.
That's
and,
right.
Exactly. So
how I use this is that I look to see what type of market environment I'm expecting in the future, right? We always have ideas about the market. So if I believe that the market will, let's say, continue to go up, I'd want to test in the scenarios where the market's going up as well. But I'd also want to stress test during those bad markets as well.
exactly.
So
And that's where we can get in and check out some of the, we could go pandemic sell off and check that out and see.
It didn't work that well.
Not that great. It's a short time frame as well. So it's, you're not getting as much color. But I mean, even then we could go to, hey, maybe when energy was absolutely going crazy.
Yeah.
Still not too bad.
Yeah.
But yeah, so I mean, I feel like that's a good.
The buy and hold made $47 and we made 239 in that in the trade war. But
yeah, and we've been talking about all directional stuff too. But maybe if we were to go back to selecting a different strategy, maybe we want to do a delta neutral strategy where maybe we want to trade a symbol that's trading a little sideways. Let's
do IWM.
IWM. We could pull up IWM.
This is the Russell 2000. The Russell 2000 has kind of been stuck in a range here for a while. This is something that, and we'll just choose what, 3 years?
3 years, yeah. And we will keep every day one trade. We'll keep our exit conditions. We'll just hold until expiration. And then go ahead and run the test.
Okay.
Not too bad.
Well, what's funny about this is like the buy and hold lost $1.
$1.
Because we basically are the exact place where we started with the Russell. How long back was
holders
3 years ago?
Quaking in their boots right now after holding it for 3 years, right? It's just like, oh, with all this work. But yeah, so that's where it comes in nice, where we can kind of check out and see how directional strategies would work, how non-directional, and maybe maybe you were trading an iron condor during the let's see, the post-pandemic surge. How would have that performed?
Lots of different adjustments.
Not that bad.
Lots of different adjustments. This is educating yourself. It's educating yourself on how options work. It's really nice to be able to look at the logs to see what strategies work during what environment. It helps you to kind of determine what perhaps you should look at and consider during different market environments, how you can make adjustments to trades to get better performance, at least historically, and then you can make assumptions about the future.
Like it. Well, it looks like we're hitting 4:15, and we've kind of talked about some of the main stuff. We got good resources on our help center and stuff. And I'm sure we're going to be doing some more of these in the future as well. But let's go ahead and just look at some of the questions here.
So one of the good questions that we got several times is about the 0 DTEs.
Yeah.
So right now we do not have intraday data. We are doing data at 2:45, and that's when we're entering the trades and when we're taking those trades off is at 2:45. So the closest you're going to come to a 0 DTE trade would be you just putting 1 in there. And what it would be doing is basically opening up the trade on Thursday, for example, if it's SPY, opening up on Thursday, and then it's going to be expiring the next day. Yeah. Right?
As close as you can get.
Yeah, that's as close as we're going to get. But that just requires a lot more data, and something that we'll see if this is a success, then we will. I think that's something we could probably work on.
Yeah, and that's one thing too to point out is that if you do have any requests or want to give us some feedback, be like, hey, this is great, nice job. We always love a pat on the back, but we do love the bad feedback too. I mean, how else are you going to make something better, right? So if you want to see anything else on here, do you want to compare back tests, do 0 DTE? The more requests we get, the more justification we have to get the priority on that too. So if we see a lot of people asking for 0DTE, we probably will get it up right away, right?
Another question here about CSVs, downloading the data. Yes, absolutely. We've mentioned that you can go down to logs, you can click download. You have 4 different spreadsheets that are available within this backtesting. Somebody else asked about futures, and do we have futures available right now? No, we do not, and we do not have SPX yet. Those are things that we're going to look in for the future, but you can make assumptions. This is more about not so much about the individual stocks, let's say, but more about the strategies that are involved. That's how I like to think about this.
Yeah, it's a little like product indifferent. It's more just
the strategies, understanding how options work. So if you wanted to, let's say if you wanted to make a comparison with SPX, right? SPX is a great product, right? But so is SPY. But it's basically 1,000 shares of SPY, so there'd be about 10 contracts. So if you wanted to have something kind of comparable to SPX, I know there's different tax treatment for some investors, but just everything the same. We could just say, just change it to 10 contracts instead of 1.
Yeah. Great. So yeah, those futures. I saw the question someone's asking about, can you run this using a moving average? I'm not sure if you mentioned this earlier, but with downloading those spreadsheets, what's really nice is that you could, take that data and match it with, some of the data on your moving averages and be able to chart that up. And
absolutely. I mean, nerds love this, because you can, I love a good spreadsheet. And so if this is something that you'd want to do, I mean, conceivably, you could add your own moving average to the spreadsheet and see, or because you have that data there, you can cherry pick and say, okay, I would have bought here, I would have bought here, I would have done this strategy, I would have done this, based off of your moving average. So you can definitely make modifications and examine with the log.
I see the question. Yeah, the export comes out to a CSV file. And I mean, if you open it up in Excel, it automatically asks you if you want to convert it to an XLS file. So it should be pretty straightforward. Let's see what other
VIX we do not have at the moment.
I see. Will any of the backtesting functionality be available through the API? I don't believe we have any plans for that right now. Maybe something we'll look down on the future, but yeah, not as of right now.
2:45 is fixed at this moment. All trades are occurring at 2:45 Central Standard Time. That is a fixed time for now.